Good morning. Let's start on the dollar. So yesterday's live stream, we talked about whether we were going to drop into this daily fair value gap or not. I said, we were looking for bearish setups yesterday. So it would be, the bearish setups would be stronger if we never drop down into this fair value gap. That's something that ICT also kind of reiterated himself. He said he'd like to see this stay open. We dropped into it yesterday. And as you can see today, it'll be easier to see in the 4 hour. Today what we did was, so this was yesterday, we gapped up, left it, came down, closed in that gap, traded past consequent encroachment, but then couldn't even close inside of it. I like what's happening right now if we can see higher prices for the day, because if we start to see higher prices today and we take out this high, then that'll mean this fair value gap did its job and it's running now for this higher buy side, which will work in our favor because we are currently framing bearish setups in the indices. So let's go over to those. Start off with NASDAQ. Go on the weekly. Yesterday we retraced a lot more than I was expecting us to retrace on NASDAQ and ES, but I like today how our higher time frame for value gaps are holding off price. So you can see on the weekly, the bodies are respecting consequent encroachment. You can see on the daily, we're still in this weekly fair value gap. I think today is an interesting pivotal point. I want to see if we take out this swing low, because the fact that we came up and closed above these levels on the daily, didn't expect this much of a retracement. So I think the opposing opinion is the dollar topped and is going to go lower. The dollar hasn't had a retracement in a while. So if the dollar was to go lower, then the indices would be going higher. I mean, I don't subscribe to that. I think the dollar is going to go higher, and I think the indices are going to go lower. So we want to make sure that we take out this swing low. This is our first priority, because if we take the swing low, then we will continue. But if we don't take this swing low out, then I would be nervous for bears. Going to the 4 hour, you can see we took this buy side up here, and I like how we're making, now we had this shift in structure. It looks like we're now delivering the sell side of a market maker curve, which I like. Again, we're going to be aiming for these lows today, and then this low. Gonna go over to ES, because I'm gonna try and trade ES today. So ES, we have on the weekly this wick. We are now, we respected consequent encroachment. We traded just past the upper quarter, but I like how heavy it's getting now. On the daily, we came back up into this daily fair value gap. I wanted to see it, just leave it for good. I was a little nervous. Not nervous, I was surprised at how much it retraced yesterday, but it looked like we were just going for this daily high, this wick on the daily. So now that we took that daily high and we decided to leave the fair value gap again, I want to see us take this low. If we don't, we could range bound, but I think our next expectation are these lows. Since, we took liquidity on the daily, we've left this daily fair value gap. Going to the 4 hour, you can see the same. It looks like we're initiating the sell side of the curve. Took that high in the 4 hour. We're retracing. Going into the open, I'm going to see how we respect this 4 hour fair value gap. I want to see us disrespect it, actually. So I want to look for bearish setups, downside setups. So I would like to use this as an inversion, actually. but I want to see how we respect it, because I think if we close below it, that aids in our narrative of taking out these sell side lows if it just disrespects this fair value gap. Going to the 1 hour. Oh. Going to the 1 hour. Same thing. We have this small fair value gap inside here, so I guess that'll be the more specific level to watch. I think I'm gonna take this off. So yeah, we're looking for the sell side. We've already moved a lot off. We had 8:30 news driver. It was core retail sales. So we already moved a lot off the 8:30 news. So I would say let's make sure we're not trying to chase anything. But I am expecting today to be down. I want to see sell side taken. Okay, so that's the 15-minute. Let's go to the 3-view chart. Yeah, so this is that London low from yesterday. I'd like to see the sell side taken. You can see the dollar's looking pretty bullish on the 1-minute chart, but remember the dollar is leaving that daily fair value gap to the upside. So as long as we want to see if the dollar continues to show strength, you can see on the 5-minute ES we came up. Yeah, look, we kind of used these levels already. We came up, tapped right at the bottom of that hourly fair value gap. That's inside this 4-hour one, this inefficiency, which also lined up with this 5-minute fair value gap. So we just came up, tapped it, went lower. This is a lot of movement prior to the market open. So I am going to definitely be cautious. Don't want to get caught in a pullback. So like the idea is all the retail traders see this and they're going to try to get in going short as soon as the market opens. So you might see the market kind of run up against all those short entries / anybody who's been trailing their stop loss throughout all this. So I might look for, I would accept us re-entering this 5-minute fair value gap. I'd really like it if we took out like a high and then sent it lower, or if we tapped back into this hourly. I don't know if we're going to do that. We're kind of far from it now when we had this. So let's see. I actually want to take a look at NQ. We're at a new week opening gap for NQ. A lot of new week opening gaps around here. Okay, market open. Let's go back over to yes. See what happens. Watch the dollar. Again, so what we're going to be looking for is kind of a pullback for smart money to pull back and run some of the stops that have been trailed for anybody who's already been short / any retail that tried to just go short at the market open. Gonna watch because we want to get in, but if we don't want to just get in immediately if we say take this swing high. Actually, what we'll do is we'll just watch the opening range. Sometimes you forget. See, I think that's one of the good things about the silver bullet is, like, it calms you down. You know, it's like, okay, we're moving. Where can we get in a short? Where can we get a short? And then it's just like, you remember, it's like, well, if you just wait, like if you make your model based off of time, like I have to wait until 10. Now you just have to wait for all this extra information. And it doesn't sound like a bad thing, but it's like really hard to do sometimes because we might see this swing high get taken and then it go lower. Then you might feel like, oh, it's going without me. And you know, sometimes you'll enter a trade and it'll work, and then sometimes you can enter a trade and it'll keep going against you. It's any rule that you have that will demand you to wait for more information is probably a good rule. And it's also probably a hard rule to follow. Because it's going to require you to be patient. It's going to require you to be a little more disciplined, and it's going to make you miss moves. And that's, in the beginning, that's not fun to do, is miss moves when you're first starting to trade. Okay, so I'm watching this open. See how NASDAQ is dropping right now, and ES is kind of having this pullback. It's another reason why to just kind of sit this opening range out. Yeah, right now we're printing a bearish candle on NASDAQ, but a bullish candle on ES. Yeah, so you can see here, you know, we're waiting for the ideal setup. A little bit of discrepancy between NQ and ES, which is fine. Because of that discrepancy, I'm also just gonna kind of wait a little. So we just tapped into that hourly fair value gap right here on the hourly. I'd rather see it happen on the hourly candle. So like when we get to 10 o'clock and we'll make a new hourly candle, that'll be interesting to watch. We did take a 5-minute high, so we're gonna see how it plays out now. So we just took that 5-minute high. We'll see if it wants to send price lower after that. I've noticed usually 15-minute highs, when you take 15-minute highs, that's when it really or 15-minute inefficiencies is really when it starts to move afterwards. So right now we're tapping into this 15-minute, small 15-minute fair value gap. This one's so small, I would expect this one actually. Unless price really wants to go lower, then it could tap into that. We're still getting that discrepancy between NQ. Cause see, look, NQ is making a lower low right now. ES isn't. It makes me pretty hesitant. Like this wouldn't be a terrible area. To go short in. This doesn't line up with any of the models that we're trying to trade in this channel. We're trying to, between 9:30 and 10, we're trying to trade the 2022 model, which is not this. Would have been 2022 model, could have been nice further up here. Again, so we're waiting to see if these two higher time frame PD arrays fail, but right now they're actually look like they're not failing. So this 1 hour fair value gap is the inefficiency inside of this 4 hour fair value gap, and as you can see right now, our 1 hour candle is actually, we got down pretty low, but it looks like it might want to respect that. Just trying to figure it out right now. And we definitely have to demand a lot more precision and information right now, since we're having this decorrelation between NQ and ES. The dollar's just kind of been sideways after its 8:30 move, had that 8:30 move up. Now it's just kind of going sideways. For ES, I would really like it if this hourly candle closed below these fair value gaps, because then I'd be a lot more confident in claiming this sell side as our draw of liquidity going into 10 o'clock. But if we hit 10 o'clock and we've respected these two PD arrays, you do have a buy side narrative in play. As you can see, NASDAQ's still making these lower lows. ES is not yet. NASDAQ looks like it's dropping. It's plummeting. You can see NASDAQ bounce, respect the new week opening gap, come down, up, down. So NASDAQ is taking these lows on the hourly, whereas ES hasn't. So I have a little bit of an SMT divergence there. NASDAQ's a lot weaker. So if this 9 o'clock candle actually closes within this hourly fair value gap, and then at 10 o'clock we see a big move upwards, I would go long. If it closes below this hourly fair value gap, I would be more interested in shorts. This is one of those days too when you see this decoupling in NASDAQ and NQ. If you're going to trade, it's probably better not to trade. But if you're going to trade and you're trading a specific model, you really got to focus on where's the liquidity? What liquidity is it seeking? Which I guess should always be your focus, but I guess probably need to be a little more nimble with it. Because when these two indices are performing differently, one might be telling, look how bearish NASDAQ looks, and ES isn't telling that story. So if something plays out where ES starts to run up a little in the 10 o'clock hour, you have to be ready to know which one are you listening to. Yeah, price isn't looking too great. This isn't even tradable, but I really just don't like the difference in how NASDAQ and ES is printing. So NASDAQ is taking that sell side liquidity, which was Monday afternoon's low. So that's another thing too, is we're seeing this SMT divergence. If that bullish scenario did play out where, I said our 9 o'clock candle closes within this hourly fair value gap, and then we see some strong movement up, that's where that SMT divergence would become relevant, because now, NASDAQ swap liquidity went down. It was going lower to sweep liquidity. ES has been just kind of accumulating. So it's what it's saying is that lower low on NASDAQ was really just an SMT divergence. That's how you confirm it. So it looks like this hourly isn't going to want to close. It's going to close below. So yeah, I'm liking this sell side draw liquidity for our silver bullet. Okay, so if we don't form another fair value gap between this candle and 10 o'clock, I would try and use this as the silver bullet. We have the dollar that looks like it's creeping its way up. We closed above this hourly. I mean below this hourly fair value gap. I'm actually just gonna take this 4 hour off because that was the real inefficiency inside. I'm not liking this too much. I mean, it can definitely deliver, but I don't know. I'm not going to enter on it. The dollar kind of gone below some lows. And it wasn't a whole lot of conviction. Like this 1 minute candle was like a good candle, but on the 5 minute or it wasn't a lot of conviction on the 5 minute. It's just kind of a meltdown on the 5 minute. We came pretty far on the hourly. Like I could see us coming back up and tapping the bottom of this hourly. We might just deliver down though. It's also not like a fair value gap on, see, I mean, yeah, this just kind of lends to the fact of when the markets are decoupled, but sometimes some like really good fair value gaps, like really good setups are fair value gaps. Like the same 1 minute entry will be there on NQ and ES. So if we did enter here, the stop would probably be up here. And I like how this body closed within the bottom quarter, but I just don't like how there's this drop in dollar. The bodies tell the story though. Okay, we had a body close above 50%. Yeah, I mean, I was fine with this body, but after seeing this body close above 50%, I don't like it. Drop in dollar. Our stop would be like right up here. Which would be a pretty tight stop. It'd be a 2.5 point stop. Not bad. But I'm okay with missing it. I'm okay with missing this. It could, you know, the bodies are respecting it. It could deliver down. Because this is one of those scenarios where, you know, you saw this like kind of decoupling in the open of the two indices, and it's like this isn't like a primo fair value gap to the downside, so we'll watch it play out. We have a huge new week opening gap. I mean, new day opening range gap. That's what it is. Okay, so we're leaving the fair value gap now. So it's feeling a little safer if you were in that trade. You'd be, to get your first 5 handles, you'd have to beat that there. This is one of those examples of a trade that I feel like when we first started the account, I was taking just because I feel like I had to trade because I was live streaming. And then when I reflected back on it, I was like, no, you're just trying to take every possible trade because you're live streaming. When in reality, you probably wouldn't take that if you weren't live streaming. And yeah, there you go. See, when this candle was printing all the way down here, you felt like, okay, it's going in my direction. It's leaving the fair value gap. It's closing downwards. And then, boom. We still wouldn't have been stopped out, and we still haven't had a body close inside of it. But, yeah, there we go. Close outside of it. Yeah, I had a feeling that we were gonna kind of either come back on the hourly and hit this or tap into this hourly SIBI. And the dollar was dropping while we were thinking about entering this to go short, so you don't want to do that. If we get if we get a fair value gap form to the upside above this range, I would take it to go long. And I wouldn't want to see this. I wouldn't want to see this be entered into. Okay, so it looks like we could have one forming right here. Again, my bias for the day was bearish. I mean, I keep going. I enter every day bearish, but that doesn't mean we can't take long setups. If they're short and they make sense. Still hasn't been a fair value gap that we could have entered on. Let's look if NASDAQ did anything. No, it doesn't look like NASDAQ did anything either. Okay, so we're being patient. Whoa, yeah, see what we're doing right now is the market is running against everyone who trailed their buy stops here. Or their stop losses. Lower, lower. I guess technically this was a fair value gap right here. That 10 o'clock. That's not obvious at all, though. And then it didn't even come back below, like touch below this one. Whoa. Okay, so we got our first fair value gap right here. That looks like it could have something to enter on. I'd give it a buy there. Put the stop right there. Trying to fill in the rest of this opening range gap. We're in the bottom 50%. See if it wants to see the top of it. On NASDAQ, took out, there was an SMT divergence for NASDAQ. NASDAQ took out this sell side liquidity on its 15-minute slash hourly. NASDAQ took it out. I'm going to go over there real quick. Yeah, we're having a decent discrepancy. So like NASDAQ took this out, and I'm not super convinced like this is like a buy program. I think we could just be retracing. After having such a big opening range gap. Because ES is looking, I'm going to take this off for a second. ES, if you look at the 1 hour, it's looking a lot more bullish. So we had this lower low come up, but then it turned around and made a new high. And then we failed to make a lower low again. So that's making it seem like it wants to go up a lot more. But then if you switch over to NASDAQ, NASDAQ made this same lower low, but never made that higher high relative to ES. And then we dropped down again, made a lower low again, and now it's turning around. So NASDAQ is pretty much in a downtrend, if you want to bring trends into it. And ES looks like it's starting an uptrend, and it's just this kind of decoupling in this opening. It's definitely a red flag, and it's one of those things where it's, you know, there are some days when you can just take the first fair value gap that forms at 10 o'clock. If you like, oh, well, we got some sell side liquidity down here. Let me take the first, you know, we got some movement towards it. Let me take that fair value gap and it'll go. And that usually happens when everything's firing on all cylinders and everything's in correlation and there's no high impact news and the market's humming like it should. But now is a time to be hesitant. And I kind of took this off too, because what I was really hoping for was, I was hoping the next candle that formed after the three that formed the fair value gap, I was hoping this one would drop into it and send it higher. Because that would show me like, okay, it really wants to go higher. The more the longer we spend before we drop it down into this, the less I like it, because like I said, with these this discrepancies in the opening of NASDAQ and ES, it's hard to tell. It's hard to pick the draw on liquidity right now. And if you aren't really confident on the draw on liquidity, don't enter a trade. I mean, I wanted sell side here, but I wasn't super confident in it, so I didn't enter short here. And now we're going up, and you know what's really stopping me from going up is NASDAQ. Why NASDAQ looks so weak. If NASDAQ looked as strong to the upside as ES did, I would probably feel a lot more confident going long here. We have this dropping dollar, so the dollar's dropping a lot, so that's tempting me to get in the trade. We're at about 50% of the opening range. Let's see what the 5-minute ends up looking like. I like it when a 5-minute fair value gap forms. And then I like finding like a 1-minute fair value gap inside of the 5-minute. But if ES takes this swing high, I think this intermediate swing high is in danger. There we go. Yeah, so I'm gonna focus on this. I'm gonna wait for this 5-minute fair value gap to form. The dollar's dropping. I'm gonna look at the dollar real quick. Interesting. Yeah, if the dollar takes this low, that wouldn't be good for bears. Okay, so we had that 5-minute fair value gap form. I'd fancy this. Stop would be down there. Gonna watch NASDAQ closely. I don't know. When I have it on the chart, it's just like, part of me is like, are we just retracing to go lower? Because we had such a drop in the opening. Let's see. We'll see how it behaves. We haven't really had a silver bullet entry yet on either NASDAQ or ES, so this could be it. But like I said, I'm not super confident on the draw liquidity right now, and it's like when I don't have it on the chart, when I don't have like a limit order here, I'm like, oh, that right there is a trade. When I have the limit order on it, I'm like, oh, this is just a pullback to go lower. bullish breaker on the 4 hour. I'm seeing this high low, lower low, but I don't like that too much. Yeah, I guess it wants to go up. Straight up left this one open. Now that we're above 50% of this opening range gap, I do like that. Dollar's continuing to drop. I like how we're peaking above this swing high. Right here we had a tiny little fair value gap. That was probably the silver bullet. So that was probably, that looked like the silver bullet for this session. Very small, very small. Gonna look at NASDAQ. Dollar is just dropping so much. If the dollar wasn't dropping like it is, I would be saying that ES is gonna go lower. But I'm fine with sitting on my hands. No trade is still a good trade. And you know, something that I think today is a good example of is if you are somebody who is making the silver bullet in your model, there are going to be days where you don't get to participate in a run like this. And it's basically because whatever entry model, like you would have had to have entered prior to this candle right here, and whatever entry model would have you be entering there, it's not the silver bullet. So it could be a turtle soup. It could be on the NASDAQ, since we took that hourly and 15-minute low. It could be a turtle soup, but you're not going to get that. You're not going to, that entry isn't a silver bullet. So if the silver bullet is your model, you wouldn't have even been able to enter until right here. Let's go check the other. Let's see the 2 minute. Oh, not the 25. The 2 minute. Nothing on the 2 minute. Nothing on the 3 minute. And nothing on the 4 minute. So yeah, you wouldn't have had a silver bullet fair value gap to enter in on. Like right there, that was it. But I wasn't super comfortable taking that one. Well, actually, you know what? I didn't really see that one. That was the thing, because I was kind of drawing this one out and focusing on this one. I didn't see this, but I probably wouldn't have entered that anyways, even if I did see it. And that's another thing I think I'm trying to showcase on this channel is, I remember, you know, sometimes I would get frustrated when moves would happen, and I was like, how did I not see that? Like you almost feel like you should have been in it. It's like a move happens and it's like you feel shame or guilt because you didn't predict that was going to happen. But then you have to think back, like, would your model have allowed that to happen? Like if we had a fair value gap form, well, we did. So we had a fair value gap form, but say we had a candle enter in like here or here, and then I didn't take it and it ran. Okay, then I can kind of be like, okay, well, I didn't execute on that, but there was nothing here to execute on for our model. So, and I think, you know, there was a while where I was trading without models, and when you're doing that, you're just opening up this way of thinking as well. Because if you're not trading with a specific model, then like a run happens and you just feel shame that you weren't in it, but you never had a reason to be in it in the first place. You're just chasing price all back and forth on the chart because you don't have a model. And to bring it full circle, one of the things I want to display on this channel is, you know, what it looks like when you're trading with a model, and like, you know, the pitfalls and the downfalls. And this is one of them. You know, if your model is, I'm going to trade between 10 and 11, a fair value gap in the direction of a draw on liquidity. Well, aside from this little one right here, which was decently hard to see, and the draw on liquidity wasn't super obvious, this buy side. Like, yeah, we had an opening range gap to fill, but these are the pitfalls where it's like, okay, well, I wasn't able to participate in this. And then it's like, you know, now I'm okay with that. Like, I don't care. But a while ago, I would have been upset. And I would have felt like I need to get into, like, my desire to get into a trade would have increased immensely. What I would like is if we had a good sized drop right here that formed a fair value gap, and I would kind of consider this like a breaker, up, down, higher, high, break, and I'd enter on that fair value gap. We closed in about 50% of our opening range. We took buy side. You can see how the candle body stopped right at buy side, right after we took the buy side. I would like that. We took some liquidity on the hourly and on the 15-minute. I would also like that because I would just like that. I was gonna say, like, it could also constitute us scalping, say, retracement. So say if this is a buy program and you entered like right around here, if this was a buy program, it could be retracing to like 50% of this 15-minute fair value gap, and you would get your 5 handles. And so you'd get your 5 handles even if you're offsides, basically. Looks like that is ES. Nasdaq's pretty V-shaped. Yeah, it's just rough that the opening was so different. Makes it hard to read. Yeah, but these aren't good marking conditions because, I mean, aside from this fair value gap, where's the next one you would have entered on? I mean, if it was like a really good buy program, low resistance, everything was in sync and working the way it should, there probably should have been like at least one other entry that looked nice. I mean, you could have entered on this, put your stop at the bottom of this, and you'd still be in this run, but Something I think I would have probably got me entered in on is if on the 5 minute we came back down. So what I was watching was this as a breaker, this low, high, lower, low break. If the 5 minute came down and tapped this zone, this fair value gap, and this high, or even this into this fair value gap. So say this one wasn't as bullish as it was, but it still formed this fair value gap, and the next candle opened like right around here, and then it dropped down. That would have been a good entry. That would have been an entry that I would have liked a lot. But it didn't, just ran. And another thing that I think comes with a little more maturity is watching this. Like it kind of made sense, but just the fact that I was expecting shorts. So unless I am like really confident on what's happening, I'm not gonna enter long. Like you could still probably enter off this fair value gap and like get lucky and scalp 5 handles to the upside because it's clearly going up now. But look how much we've moved. You've already taken buy side. Yeah, the next buy side could be up here, but that's not like that's not the probability that I want in a trade. And I already had, and it's like against what I was doing. It's just kind of forcing a trade. I was going into the day looking for shorts, went long. It went long, but there wasn't like a clear entry model. At no point did I feel like I had a read on what was happening. Let's look at NASDAQ. NASDAQ hasn't really taken any buy side liquidity. Just gotta wait. That's all we're doing. Waiting for something good, something obvious. Yeah, so only trade I'd take closing out this last 10 minutes would be a break below these swing lows, entering on a fair value gap to go lower. Okay, I'm going to end this. Thank you for staying with me. And I appreciate you watching. I'll be back on in the afternoon. Hopefully there will be something that gets us in a trade.